Hey YouTube, what's going on? It's your boy TriniFX here back with another one. In today's video, guys, I want to go over today's entire price action, not so much from a trading recap perspective, but to go through exactly what I look for on a daily basis. I'll try to break it down as much as possible so even someone who is brand new to trading could begin to understand my thought process. Now, none of these concepts are mine. All of them I learned from ICT Inner Circle Trader. So go check out his channel. He is the author of all of these concepts. So what I normally do coming into today, I start on a 1 hour chart. There are times that I will check the weekly, probably once a week to see, where we're at. I'll also check the daily at the end of the day and mark off whatever levels. But coming into the new day, I normally just look at a 1 hour chart, sometimes a 4 hour, but a 1 hour, where I see what price did the previous day. So if we take today, for example, and we look at Wednesday's trading traded higher. We marked off our fair value gaps. Let me just change this color because this became an inversion. Right, so this was a SIBI. Price went up, found some resistance, then broke through it, came back down, hit the hourly, found some support after it inverted, and price more or less traded above. So coming into today, what do we look at firstly? All right, what happened? Price traded down into the 1 hour BISI, still finding support between the 1 hour BISI and the inversion fair value gap. Asia traded higher, didn't take out yesterday's high just yet. Market open now. The reason why I mark out midnight New York, because that is where, according to ICT, the algorithm begins to run. That's where it starts. So I mark that out. And what I like to see is a power of three setting up. And what that is simply market open. If we were to go long, I would want price to trade below and then trade back above. And that will give me my bias for the day. And vice versa, if it's short, I want it to trade above midnight and then trade back below. All right, so that's what I look for initially. And for today's price action, we saw midnight open, we traded lower, and we had all these wicks, so price could not break lower. Didn't give me much displacement lower, however, it did trade below and started to trade higher. So if we jump to a 15-minute chart, now the 15-minute chart, as I mentioned, that's what I like to call and ICT our bellwether chart. It's a chart that will give us the information that we need so that we could day trade because we do intraday trading. All right, so midnight price traded lower and then began to trade higher. So if we mark out our New York open, so before New York open, what I like to do as well is I like to mark off any fair value gaps that are below or above current price at that time. So between 9:15 and 9:25, you get to the chart. If not before, you mark off. For instance, this was a 15-minute bullish fair value gap that was below price. So you mark that on. Start to give you context. My narrative or my bias for the day before New York open was bullish prices. All right. So I'm looking for confluences to stack onto there. And what does this look like? This more or less looks like some accumulation. Candles just traded, very small back and forth. We did have high impact news today. So at 9:30, what did price do? If price is truly bullish, what you would want to see is price trade lower, then higher. And if it was bearish, you would want to see price manipulate higher and then go lower. So price did exactly, what I anticipated it to do. It opened and immediately traded into this 15-minute fair value gap. Now, while price is trading into there, what you want to see is a rejection. You don't want to drop to the 1 minute time frame and start to look for entries immediately. So price traded into it and started to reject. So once I saw price beginning to reject and go back up, that's when you could drop to your 1 minute time frame and see if you could frame an entry. So today I actually took 3 entries and we'll get to it. So this actually was my first entry, and we could see 9:30 opened. We dropped down into this 15-minute fair value gap. It was a bullish fair value gap, and if we want to get very granular, we could see price also wick down into this 1 minute BC. So it wicked down, left a very tiny inversion fair value gap there. If you look very closely, let me mark it off. So price was extremely bullish on market open. So it traded down and then immediately started to displace. So these candles were very, very aggressive. So price traded up, inversed this candle. I was looking for a pullback into one of these fair value gaps, but when I saw it created this fair value gap and started to trade away, that's where I took my entry. I put my stop right below 9:30 open, and I was simply targeting 1-to-1 risk to reward because we did have buy side liquidity. Also, if I go back up to 15-minute time frame, we also had London highs. So this was today's high. We also had liquidity here. So I wasn't holding for the long haul, although price did rally. But I was targeting the immediate minor buy side, today's high. So dropping back into the 1 minute, we could see exactly how we frame an entry. We start on the higher time frame, 1 hour, and we come down 15 minutes. What we want to see is we want to see price trade down into preferably a 15-minute fair value gap. If no 15-minute, then a 5. And then we can drop to a 1 minute or even a 30-second chart if you have access to a 30-second chart. So I took my entry, got out on that high for a 1.23 risk to reward, and this was the first trade, guys. Yes, price continued to rally, but if you go back to your chart, you would see several levels of buy side liquidity. So I targeted the first one because you never know, price could have taken liquidity and reversed. So I got out there. If you had several contracts on, you could have taken partials and continued to run higher. So ultimately price traded up, traded higher, and then began a descent, right? So this would have been just a minor pullback. So we could see price rallied up and started to roll over. So if we take it back to our 5-minute chart, you must always be checking in your higher time frame charts. Don't just stay on the 1-minute chart. You're going to get lost. So let me just mark off this 5-minute SIBI. So as price looked like it was going to retrace, I went back up. I didn't see any 15-minute fair value gap, but a 1-minute fair value gap was present. So I marked it off and I waited to see if price would have given me a retracement into it. So price traded into it I didn't have any intermediate term high. This was my nearest intermediate term high. I could either class this or this. I chose this as my intermediate term high for my market structure shift. Because we could see price rallied, spent some time here, rallied again, came back down and took off. So I marked this off as initially it would have been a BISI that sent price higher. So I would have wanted price to break here for me to look for an entry. So price traded lower, it broke it on that candle there, left behind a 1 minute fair value gap, inversed this SIBI. So initially first utilization would have been a bullish run. So we could have expected it to form some support and send price higher. So once price inversed it, this BISI changed its function and now acted as resistance on price. We could see as it closed, the candle bodies could not close above consequent encroachment of that inversion fair value gap. So we had our market structure shift. This is an intermediate term high because it traded into a fair value gap and traded away. So once that was broken, that was step 1. Step 2, 1 minute fair value gap. What added more confluence is the inversion fair value gap. So as price traded up, couldn't get through, this candle traded higher into the 1 minute fair value gap and traded away. Once this other bearish candle closed below, that's where I took my initial entry. So that was a confirmation entry. I took my entry, put my stop above the candle that formed the initial fair value gap on the 1 minute chart. And yes, I was targeting lower prices. However, I knew a 15-minute fair value gap formed. So you have to be careful because price could have reversed, which ultimately it did. But I was able to capture 1.61 risk to reward. I took some partials on this. You could check out my YouTube short. I recorded this conversation, so you will see where I got out, where I took partials, and how that trade played off. So that was the second entry. The third entry, my thought process here. All right, so if price was to go lower, we'd have continued on this 1 minute fair value gap, or even if we had a deep retracement, we could have continued lower. However, price traded lower, traded back up, could not break below that low with the wick. But if you see the bodies of the candles compared to here, this was a sweep of liquidity on the bodies, not the wick but the bodies. So the body swept as it broke above. You could have classed this as a shift in market structure. I didn't class it just yet. I waited for price to trade higher, finding some resistance in the inversion fair value gap, which I took from all the way across here. I dragged it across because we could see it found support here, broke it, became resistance, sent price lower. After price retraced, sent it lower. So it would have acted as resistance. So it did send price lower, but where did price go? It went into a 5-minute bullish fair value gap. So we are already in a 15-minute bullish fair value gap, higher time frame. We traded back down into a 5-minute bullish fair value gap. So these are the fair value gaps that I stack. The higher the time frame, the more strength I look at it like that. It's a stronger fair value gap. So after price traded into the 5-minute and gave me this displacement, I was looking for it to retrace into this 1 minute BISI. However, 1, 2, 3 candles I entered on that candle close. I entered there. So go and check out the live trade walkthrough. I walked through this trade I went long here. Yes, price came back in because I was ultimately looking initially for 50% of the range. Price traded back into the 1 minute fair value gap, rallied, came back down, retested it one more time, and then took off. Right, so this was the third entry. Entered there, stopped below the bodies of the fair value gap, or the candles that created the fair value gaps. And this is what I class as my market structure shift, because after hitting the inversion into this 1 minute SIBI on this side, this sent price lower. There's no other intermediate term high here. So once price broke above there, I marked it off. Alright, that told me we were on side, delivering from a 15-minute and a 5-minute bullish fair value gap, shift in market structure, traded back above the inversion fair value gap. So where it was resistance here, I anticipated that it would have become support here. Took my entry, price traded back down into the 1 minute and the inversion, began to trade away, retested the 1 minute one last time, and then it was off to the races, guys. So I marked off my levels that I wanted to take profit on a 1-to-1, and then this buy side liquidity, I was ultimately targeting this high here. Price never got to it during the time I was trading. And yeah, you could see where I trailed my stop on the recording. Once we traded above the inversion fair value gap, that's where I placed my stop, because I would have anticipated from being used as a resistance, it would have be used as support to send price higher, and price traded into this 1 minute SIBI, and it couldn't break higher at that point in time. So guys, those are the 3 trades that I took today. I really hope you took some notes, and you understand it starts from a higher time frame first. Then we come down 15-minute, 5-minute, 1 minute, and we need to have a bias first. If you are unclear, don't take a trade. If you are in between 2 higher time frame PDRAs, do not take a trade. It's like if you're in a consolidation, you normally wait for one side of the market to get taken and then the other side, so it will break out of the range. So it's better that we don't trade, preserve capital, because all it takes is one trade, guys. This initial trade from this morning, this one here, if you were trading more contracts, guys, and let's say you got in on this candle here, up to that consolidation there, that's 262 points, right? So all it takes is one good trade. Yes, it's day trading, but you don't need to trade every day. That's where some people think. So guys, I want to wrap it up there. I hope you found some value. Like, subscribe, share the content, comment. Let me know how today went for you. If this is how you trade. And I'll see you in the next one. Take care, guys. Bye bye.